No matter what the asset class, August was a wild ride for markets, to say the least. We turn now to Bloomberg's Taylor Riggs, who has a closer look at the action from this month. Taylor?
David, you are right. It was a wild ride, especially when we take a look at volatility. Both the move, the VIX, which is bond, equity volatility, FX volatility, all rose together in August. Charted here is the move in the VIX. That's bond and equity volatility, both, at least as you can see in August, really starting to spike up. And all of that volatility meant it was all about those safe havens, including gold. As you can see, at least year to date, gold is now up 20%. It topped $15.25 an ounce, the highest level for gold going back since 2013, clearly outperforming stocks and then bonds. But there was an interesting story within the bond market this month. Because as you know, all in August, you had the 10-year falling below a 150 and the 30-year falling below 2%. So that meant you needed to take on a little bit of credit risk to get that extra yield. So you have A's and triple B's, clearly the big outperformers this month. But if you were worried about the economy and some of those risky assets, you were not buying into the junk territory at the triple C's. You were selling those. So staying within the safe havens and the investment grade, but doing what you can to take on a little bit of that extra yield. I think, though, volatility, gold, single A's, those are the story for the month.